Hey guys, welcome back. Today we are solving the problem from December 24, direct taxation, total income problem. This is involving with income from house property, PGBP and deductions part. Okay, so we are going to solve this problem and understand how the problem is. Okay, Mr. Ram, resident individual, 46 years. Okay, two residential house property he has. Okay, one is used for own residential purpose, other is let out for monthly rent of 65,000. Okay, he bought these houses by taking a house loan of nationalized bank. Okay, during the financial year 2023 he paid interest on housing loan amounting to 2,10,000 each, so he paid 4,20,000 interest. Okay, and the total amount repaid is 2,50,000 for each house, so 5 lakh he paid as principal repayment. Okay, Mr. Ram is doing high-end business by name Mrs. Ram enterprises, in which income computed amounts to rupees 9,60,000, right? Okay, now you are required to calculate the total taxable income and tax liability of Mr. Ram for the assessment year under default tax regime. Okay, and also optional tax regime, and we have to advise him which is the least tax payable for which regime provides the least tax payable for Ram, right? So what are all the things we have? 2 HP, okay, 1 let out, 1 self, okay, 1 self, 1 let out 65,000 into 12. Okay, so the income for the first house, okay, 65,000 into 12, which is 7,80,000 is the total rent received during the year. Okay, and no income generated out of self, and he got the loan, which is interest is 2,10,000 for each house, loan repaid, which is 2,50,000 for each house. Okay, that's it. Then he is doing a business for his he is earning 9,60,000. Let's prepare the table computation of tax liability of Mr. Ram. For the previous year, okay, we take it as the 24-25 because we have updated amendment in this problem for tax liability. So we'll do that, and we'll solve the problem like it is happened in previous year 2024-25. Okay, particulars. Optional 115 BAC, right? Okay, so first, what income we have? Income from house property. First we have let out property. What's the let out property? Gross annual value is 7,80,000 we are earning, right? 7,80,000 minus municipal tax, no municipal tax, NAV 7,80,000 minus standard deduction 30%, minus interest on loan we pay. Okay, what's the standard deduction? 7,80,000 into 30%, which is 2,34,000 is the standard deduction. Interest on loan any for a let out property, how much whatever the interest on loan we paid, we can claim exemption here, can claim deduction here. Okay, the interest on loan paid is 2,10,000, the entire 2,10,000, right? So that's it. The IFHP for let out property is 3,36,000. Okay, this is for both. There is no change in this under regimes. Okay, if it is a self-occupied property, okay, self-occupied property, there is no GV, there is no GAV, there is no NAV. Okay, the interest on loan standard deduction is nothing. So what we have, interest on loan, NAV less interest on loan. How much is the NAV? NAV is nil. Interest on loan is limited to 2 lakhs for self-occupied property. The maximum cap of interest on loan we can deduct is only 2 lakhs. Right? Both the areas we have to deduct this 2 lakh. So what's the income from house property? Income from house property is 1,36,000 for optional regime and 1,36,000 for 115 BSc. Same for PGBP. PGBP income is iron ore business. Income from PGBP or income from Ram Enterprises, which is how much? 9,60,000, right? Okay, 9,60,000. 9,60,000. Guys, there is no interest on loan deduction for default tax time, right? So we should not reduce the deduction of 2 lakhs for self-occupied property. So this will become 3,36,000 itself. Okay, what's the gross total income under both regimes, which is 9,60,000 plus 1,36,000, which is 10,96,000. 3,36,000 plus 9,60,000, which is 12,96,000 minus chapter 6A deductions. Chapter 6A deductions not allowed for default tax regime, right? For what we can earn the we can deduct the chapter 6 deductions. Obviously the principal repayment he has done 80C, we can reduce 1,50,000, right? Okay, principal repayment just 1,50,000 cap, reduce that. The gross tax liability is gross taxable income. Yes, 1,96,000 plus 150, just 12,46,000. Okay, 12,96,000. See, this is reduction, no. 9,46,000 is the gross taxable income. Okay, now we have to compute the tax liability. Okay, under optional tax regime, 5 lakh 5%. So on that basis we'll calculate. Okay, 2,50,000 into 5%. 46,000 into 20%. So 1,01,700 is the tax liability. The for the default tax regime, the amendment is 3 lakh to. Okay, the amendment is 3 to 7 lakh 5%, 7 to 10 lakh 10%, 10 to 12 lakh 15%, 12 to 15 lakh 20%, 20 or 25, 1 minute. Guys, that's 20%, and beyond 15 lakhs, slab rate is 30% we have to pay. Okay, for 12,96,000 income. Okay, 3 to 7 lakh, the tax percentage is 4 lakh into 5%, which is okay. Okay. Percentage and 96,000 into 20%. Guys, under the new tax regimen, 3 to 7 lakh 5 percentage, 7 to 10 lakh 10 percentage, 10 to 12 lakh 15 percentage, 12 to 15 lakh 20 percentage, beyond 15 lakh 30 percentage. So our slab stops here and we take 96,000 into 20 percentage, and as usual these calculations will happen. Okay, so the next the tax liability under default tax regime is 99,200. Okay, 99,200. Add cess 4 percentage. Okay, 4 percentage, 3968, 1700 into 4 percentage, 4068. Okay, the total tax liability is 1700, which is 105, 768, 99, 200 plus 3968, 1,03,000, 168. That's it. The problem is over. I hope you guys have understood. The thing is, he has one income from let out property and one income from PGVP, and he also repaying his housing loan. No, so we can give a deduction under that. That's it. The problem is over.